operating activities. Are you okay? Cool? All right. This is mucho importante. I want you to look at this slide, and we're going to talk about this slide. Let me ask you a question. That's a pretty easy question. What financial statement do we pull net income off of?
Balance sheet.
Oh, please say you were just joking with me.
Yeah.
The income statement, right? The net income. He gave you a tip. The income. Blue. Income statement. The net income is pulled off of the income statement. It's the bottom line, right? Now let me ask you another question. Do not answer it for at least 5 seconds and think about it. The income statement, the balance sheet, the statement of equity. When we taught that to you, do we prepare those statements using the accrual basis of accounting, or do we use the cash basis of accounting? Think about it. Do we use the accrual basis of accounting, or do we use the cash basis of accounting? We use the
Cash. Accrual.
Accrual.
You said both. It's one of those. Which one?
Accrual.
Accrual.
Definitely the accrual method. This is why we have AJEs. Do you remember me talking about the revenue recognition principle ad nauseum? We recognize revenue when? When we get the cash? No. We recognize the revenue when it is earned. When is it earned? When we get the cash? No.
After the service.
It is earned when we provide the product or service. This is why we make AJEs for salaries payable, interest payable. This is why we have accounts called unearned revenue or prepaid insurance. Because we recognize, we prepare and everything on the accrual basis of accounting, not the cash basis. Okay? The accrual basis of accounting. You with me?
Mm-hmm.
Does the cash basis violate the G?
Yes. The cash basis violates generally accepted accounting principles. Because the cash basis is very, very easy to manipulate financial statements. Okay? Okay? I can just have a bunch of customers pay me at the end of the year for stuff I haven't even given them and inflate my revenue. Okay? So we have to use the accrual basis. So this net income number up here on the left, this comes off the income statement. I'm not very good at writing with the mouse. And it is on the accrual basis of accounting. You with me? This net income number is off of the income statement, and it is on the accrual basis of accounting. Cool? However, we're getting ready to do a cash flow statement. So what we're going to do is we are going to do 3 things to this number and in essence turn it into almost a net income from operations if we were using the cash flow basis. You with me? We're going to take this net income that's prepared on the accrual basis and do 3 things to it that will in essence turn it into a net income from our operations if it was on the cash flow basis, or a cash flows from operating activities. In a way, I want you to think of this as like a little conveyor belt in a factory. You start with something and it goes on the conveyor belt. And they do something to it, they do something to it, they do something to it, and out comes something different. You with me? Cool? Okay. Now, we're going to be using a handout in this. This is a Dave Krug special handout. And I'm going to give everybody one of these in a little bit. And this is what we're going to work through. If you do this like I tell you to do it, it will teach you without you even knowing how to do a cash flow statement. Okay? If you don't have one of these, email me and I will send you one. And you can do it. Okay? Now, the first thing that we are going to do along this conveyor belt, this assembly line, to turn this net income on an accrual basis into more of a net income on a cash basis is we are going to add back our non-cash expenses, such as depreciation and amortization. We are going to add back are non-cash expenses, such as depreciation and amortization. Let me talk to you about that. Okay? Okay, let's think of an imaginary income statement here. This is an income statement. We know this is on the accrual basis. You've got your revenues, right? And then you have a bunch of expenses, right? And then you arrive down here at your net income. And let's just say it's $20,000. You with me? Okay. Well, somewhere up here, you had an expense, let's say you had depreciation expense. And let's say depreciation expense was $1,000. Okay? So think about it. That depreciation expense was deducted in arriving at that net income number, because we use the accrual basis, right? That depreciation expense of $1,000 was deducted in arriving at that number, correct? Mm-hmm. But let me ask you this. Was there any cash flow that happened with depreciation? Do we write a check and distribute cash when we depreciate? Was there an $1,000 cash outlay for that depreciation? The answer is no, right? We know this, don't we? Depreciation is not a cash outflow. If you look through somebody's checkbook looking for the depreciation check that they wrote, you'll be making a fool of yourself, right?
Right.
It's a non-cash expense. Yet, it was deducted in arriving at this net income. So, when we calculate our cash flows from operating activities, what we're going to do is we're going to start with our net income, in this case $20,000, and we are going to add back our depreciation expense of $1,000. Do you see why we add it back? We add it back because it was deducted in arriving at this number, but it's a non-cash expense. So by us adding it back, we're kind of negating it entirely. Does that make sense? Because again, we want to turn this number into more of a cash basis number. Since depreciation expense is a non-cash expense, it was deducted in arriving at this number, we're going to add it back, in essence, to negate its effect entirely. Does that make sense? Now, there are 4 non-cash expenses that you're going to be responsible for. Because not all expenses are non-cash expenses. Salaries, is salaries a non-cash expense? No. There's a cash outflow with salaries, isn't there? What about advertising? There's a cash outflow with advertising. We don't add those back. We only add back our non-cash expenses. Okay, depreciation is one type of non-cash expense. What's the other ones? Anybody know? One of them's on the screen. Amortization. Amortization and depreciation have a good buddy. What's its name?
Depletion.
Depletion, very nice. Amortization, depreciation, and depletion are all basically the same thing, right?
Yeah.
We call depreciation when it's a plant asset. We call it depletion when it's a natural resource. We call it amortization when it's an intangible. But aren't they just basically spreading out the expense of a long-term asset? There's no cash flow, is there? The 4th non-cash expense, do you know what it is? This sounds like a great test question, by the way.
Factory overhead?
No. It's bad debt expense. What are the 4, I'm asking, what are the 4 non-cash expenses? The 4 non-cash expenses are depreciation expense, amortization expense, depletion expense, and bad debt expense. Because if you remember Chapter 9 from Accounting 1, bad debt expense, we are estimating bad debt, aren't we? Correct? So, what you have to do is add those non-cash expenses back to net income. That is the first step that we do. You with me?
Yes.
So here's what I'm going to do. I'm going to give you a handout, and I'm going to show you what I want you to do, and I'm also going to show you what I don't want you to do. Okay, let's just look at the first one. Okay, use the following info, each case separately, to calculate the cash flows from operating activities. Use the indirect method. Okay, what if net income is $500 and depreciation expense is $39? What's our cash flows from operating activities?
$539.
It is $539. And I do want you to put $539 here, but that's not all I want you to do. Here's what I want you to do. I want you to say net income was $500, and then we add back our depreciation expense. We add $39. Okay? I want you to do that. Okay? I don't want you just to do that. I don't even want you just to do that. I want you to do that. Because if you do it this way without you knowing it, I will be teaching you how to do a cash flow statement. If you try to shortcut it because you think there's a reward for getting it done first, which there's not, you're not going to learn how to do a cash flow statement. You with me? So you need to write it out this way. So what we're going to do now, and you can push pause on this in just a second, is I want you to do number 1 through 5 on this handout I'm going to give you. If you don't have it, email me. Email me and I'll get it to you. Okay? Here's my email. My email is dkrug@jccc.edu. Okay? So, let me give you the handout, and let's work on 1 through 5. We'll pause that, and then we'll go over the answers. So you can pause it.